Hi Andrew, thanks for joining me this morning. So you lead our UK and I banking consultancy team at Experian, and you've been with us for nearly 30 years. What I wanted to spend a couple of minutes on this morning was just getting your views on the sector change. Obviously, we've seen quite a significant amount of change brought by the pandemic over the last 5 months. What's your
Mhm.
kind of views on the market, the prioritisation, the shift and the response?
Okay. So the COVID-19 crisis is absolutely, in terms of my area of focus, the banks has absolutely overwhelmed them. Um, and at the same time, it's acted as a positive catalyst for change in some areas. If you start at the beginning, the banks were very heavily criticised by government and media, especially for the perception they were quite low in the business lending market. They've suffered as everybody has, all businesses have, because people have been ill and because they've had to implement social distancing. So that's been made it quite a challenge for them to keep their business running smoothly. And then they've had to very quickly change their approach. They've had to deprioritize on the non-COVID-19 activities they were focused on and get their staff focused on the important things that were needed to do to meet all these critical customer needs. Um, and yeah, so through that to do that they've had to ramp up some of their digital capabilities, and there was no time to bring in new ones. So that meant getting their payment portals, their chat box, and so on up and running. Um, and they've just generally had to take drastic action. So they had to look at their scoring, their cut-offs, debt profiling, portfolios, all things that, as the crisis developed, were no longer operating as they needed to operate in this new abnormal, as people have been calling it. So lots of banks, well, all the banks, have been taking drastic action, manage their cash, ram down the non-essential programs, um, look after their customers, and keep the banks going and look after the bank.
And is there any specific trends that you've seen kind of emerging from this? Is it kind of quite a common approach to it across the industry?
Yeah, so the banks have all been looking at their portfolios, what to do about people on emergency payment holidays, how to understand their affordability, looking at or preparing for the worst in terms of collections, what they're going to do there, and looking at the credit quality of people, because some people still want to and need to and are viable new borrowers. Um, so yeah, those are the four main ones: credit quality, affordability, portfolio, and collections.
And obviously, I said earlier, you've been with us for nearly 3 decades. Um,
Thank you.
so obviously, you're very much involved in the last financial crisis. What do you think is kind of different about this, or are there similarities? What's kind of how is this comparing to the other in your view as a consultant?
Um, but the last one was a bit more, if you can have a measured crisis, it was a bit more measured. This has just come out of the blue. I mean, you know, we're all watching the TV, and suddenly almost lockdown is implemented. Businesses are no longer operating. People are no longer going to work. Um, it's and everything's changed. So suddenly people who, um, from a bank's perspective, were great customers, where they're suddenly having to look after them in a completely different way to how they were having to look after them before. And they're not necessarily aware of which of those, which not the bank's fault, it's just the speed of it, which customers are the ones that need that help. Some people have stuck their hands up and said, "Can you give me help? I'm going to have a payment holiday." But many customers who've been vulnerable probably haven't stuck their hands up and asked that same question.
And I think that's quite an interesting point, isn't it? Because it's understanding who's taken a payment holiday because they're stressed financially,
Mhm.
who's taken one for other reasons, and also that scale of exposure that somebody has or hasn't. Because
Yeah,
we've seen in the analysis that we've done, some people have actually seen a positive income
yeah,
increase, and also there's new businesses kind of being created as well, which we obviously haven't seen before. But in terms of kind of impact, we've done some modelling, haven't we, in terms of the difference between this one and the last? What
Yeah.
kind of key findings of that?
Yeah. So I mean, so if we look at the emergency payment holidays, um, the there's various analysis and bits of work we've done, but yeah, I mean, some of the more fascinating bits. So, and not necessarily good news, but if we looked at the possible default rates and coming out of people coming out of emergency payment holidays, if only 10% of the people on emergency payment holidays went into default, then that would see 70% more delinquency than we saw in the last crisis. And if that goes up to 20% people coming out of emergency payment holidays into default, then we're looking at 200% more delinquency, which is phenomenal. And I mean, if you look at, again, the number of people who've got help, so we asked customers what they thought in terms of how many people would continue to need help, and we've just said 20 or 10 or 20%. They've said up to 30%, and that's up to 9 million agreements for loans and mortgages and so on, which will need further work and further looking at. It's going to be really tough. It's going to be really tough for people, for businesses, and for banks.
Yeah, and I guess obviously your role as a consultant is to very much work and partner with firms to help them through this. What are you seeing as kind of the key things that you're working on, etc., with them? What's the main things that you and your team are driving at the moment?
So I think the main things we're driving are how do banks get the data they need to make decisions. So within that, there's two areas where we've been working on. One is the speed at which we get data from the bureau to the banks, especially for existing customers, and we've both developed capability to get that data across more quickly. So it's now fortnightly if they want it. Plus, we've developed new variables that indicate those customers who could be vulnerable and could need help. We've been working on using open banking data, which is probably as up to date as you can possibly get data, so that again you can understand affordability, who needs help, even who's it viable to lend to,
Yeah.
because you can't turn all the lights out, and then it's cloud-based capabilities which are far more agile. So analytical cloud-based capabilities, decisioning cloud-based capabilities that you can implement without having to change what you've got now, because the banks haven't got time to do that, and can add value to the processes and systems you've got in place.
Well, that's really helpful. Thank you. So, as I said, we'll be keeping this conversation going. So, that was really helpful as kind of an understanding for now. And I look forward to speaking to you again in a couple of weeks so we can get a further update.
Thank you. Yeah, and me to you. Thanks, Natalie.
Thanks.